Let's get a move on and get a handle on earnings as well. Mahindra Holidays came out with their numbers yesterday, where the profit, you did have the revenues grow this time around, and in fact the losses as well consolidated for the quarter gone by to 9.7 crores versus 161.5 crore rupees. Let's connect then with the management who is joining in, Kavinder Singh, MD and CEO at Mahindra Holidays. Thank you so much for taking time out. To begin with, it's definitely been very hard for the hospitality sector. COVID has definitely put things change the overall landscape, but the company has managed to narrow their losses. The margins as well have contracted. So what have been the highlights?
Thank you so much for having me here today. I just wanted to make a few points about our Q4 performance. Actually, the Q4 performance turned out to be one of the very, very strong performance that we have delivered. If you look at our member additions, we did about 4,789 member additions, taking our total member additions to about 12,031 members in this year. Given the situation that we were all in, this has turned out to be a great year in terms of member additions. If I look at our resort occupancies, we hit 85% in the quarter that went by, which is Jan-Feb-March quarter. And for the full year, we were at 72%. So our occupancies recovered very, very sharply. If you even look at our resort income on a QOQ basis, quarter-on-quarter basis, moved up by 19%. And even if I look at on a YOY basis, our resort income was up by about 8.5%. And if I were to look at the profits, we are up by about 12% at the PBT level. And by the way, the best news for me to share with you is that we have actually added in this year, and largely in the last quarter, about 9 resorts to our portfolio, and we crossed the mark of 4,000 rooms. And we are at 4,197, which is approximately 4,200 rooms. We added about 465 rooms in this year. That's another big first in this pandemic affected year. As I've always mentioned in my earlier interviews also, that debt and occupancy are the two big areas which any hospitality player has to watch out for. Happy to confirm that we continue to remain zero debt, and our occupancies, as I mentioned earlier. And most importantly, our cash moved up from 848 crores to 940 crores. And now we can say during the pandemic year, we added about free cash of about 159 crores.
So quite a few milestones despite the kind of turbulent year we've had. But Mr. Singh, let's have you walk us through the margins. What have your full year margins been like? Because in Q4 they have contracted. And what is the outlook on the kind of cost controls that the company has taken in order to aid your operational picture?
Okay, the good news on the margin side is that even in this quarter, we improved our profit before tax margin by 130 basis points. If I look at the full year margins, our margins have improved upwards of 600 basis points. So if you look at our PBT margin, it's about 18.4%. So that's a fairly healthy jump from the margins that we had a year ago. So margin improvements actions have been largely driven by the fact that we were able to curtail our costs in the sales and marketing area. By the way, our cost of acquisition is looking much better because we have been able to acquire members through the referral route as well as through the digital route. By the way, 55% of our sales for the full year came through the referral and the digital route, which has helped us bring down our sales and marketing expenditures. It has this year we were able to bring down our rental expenditures. As you know that we have some resorts on leases, we were able to get the waivers during the lockdown period. So if I look at all in all, for the full year, our expenses were down by about 22%. So margins are up because of the expense reduction and also a smart recovery in the Q3 and Q4, both in terms of member additions and occupancies.
Okay, let's talk about occupancies and how the second wave has impacted those. What are they looking like, and particularly across different geographies as well?
So I think March turned out to be, just to share with you a very interesting data, we launched a new resort greenfield resort at Goa, Sonora, North Goa. We launched it in February. In March, we were having 100% occupancies. And of course, after that, in April, we have seen what has happened, and I will talk about that a little later. So occupancies of the new resorts as well as the old resorts, as I mentioned, for the full quarter were at 85%, which actually surprised us. We never expected this kind of recovery. Largely, I will attribute this recovery to the fact that we have now got two words which go along with Club Mahindra: trusted and safe. We are now, certified by Bureau Veritas for the COVID safe protocols that we have implemented right from the beginning. So that has helped us to actually increase our occupancies, whether it is the resorts in north, south, east, or west. We have seen very, very strong movement in terms of occupancies in our resorts. If I look at ahead, as I see in the month of April, we started April well. Our bookings on books were also quite well. But yes, after the second week of April, we have seen drop in occupancies. I think we will have to be cautious as we move ahead. My personal sense is that as the vaccination rate progresses and as the early stage states which showed very high rate of infection, as the rate of infection begins to come down with the rate of vaccination picking up, my belief is that by May end, the early states which showed rise in infections should come down. The infection rate should come down. And same way, the late stage states also will begin to come down sometime in June end. So I do see a sporadic recovery. As you know, we have a membership model, and our members prefer to travel to resorts because they are spacious, they are open. And most importantly, even during the lockdown times, they have come and enjoyed great family moments together. So I believe looking ahead, May and June are critical months as we look ahead. And I would see recovery happening sometime towards early June in some of the states and towards June and on the balance states. So this is my personal view as I look ahead. And we remain cautious in this quarter because of the fact that the situation is what it is. But you must remember that we are in some manner, we have gone through this situation in the last year. So we have a playbook. We know how to manage this situation, and we are enhancing our safety protocols as well as our disinfection protocols, as well as contactless transactions under our Club Mahindra Safe Stay program. And as the unlock happens, which I'm sure will happen sometime in June and thereafter, we should see again a very, very quick recovery, because as you saw, leisure recovery was very, very brisk from Q3 onwards. And I do see a similar trend coming as we move forward.
Okay, now you plan to invest about 1,200 crores in adding 1,500 plus rooms in the current portfolio. That's over 3-4 years. Is the current situation going to impact those plans? And are you also, looking at adjusting those? And how much cash is on your books currently for that?
The good news, as I mentioned to you, is we have now a free cash of 940 crores. Despite the pandemic year, we added about 160 crores to our overall cash position, very healthy cash position to be in. So in terms of our capital expenditure plans, I think I must go on record to say that our plans remain firm of the capital expenditure at about 1,200 crores. And we expect we will add about 1,200 to 1,400 rooms beyond 4,197 that we have already achieved in the next 3 to 4 years as we move ahead. In the first year, we actually overachieved of my plan, and we continue to roll the plan forward by looking at 1,200 to 1,400 rooms at about a capital expenditure of 1,200 crores. If I look at the cash balance position, will that be affected as a result of the capital expenditure plans? I don't think there would be any significant impact, because we generate on an average year about 300 crores of operating cash. And net of our capital expenditure, we have been adding 150 to 200 crores on free cash. So despite the aggression in the capital expenditure that we are planning, we believe that we will continue to generate cash because of brisk member additions that will follow as a result of addition to our inventory.
Sure. Kavinder, almost 90% of your revenues come from F&B and activities. How much revenue have you generated via these avenues over the past 6 months? And now with this spike in cases, what's the outlook going forward?
So the good part is that, as I was mentioning, our resort revenue moved up by about 19% quarter on quarter. So if I just look at quarter 3 and quarter 4, we delivered about 45 odd crores in quarter 3 resort revenue and about 53 odd crores in quarter 4. So roughly about 96 crores of revenue or 98 crores of revenue. And that largely is the food and beverage related revenue. As you rightly said, majority of the revenue is food and beverage because we have, we have members who are prepaid and they don't pay us for the room. So the good news is that 80% of the members, when they are at the resort, they are spending time at the resort. They are engaging in the food and beverage, as well as the holiday activities that we have lined up for them with social distancing, etc. So we are seeing a good revenue uptick. If I look at all our internal metrics, when people come to our resorts, they spend money. And that is what explains that even on YOY basis, our resort income grew by 8.5% in quarter 4.
What is then the outlook that you can give us on profit growth and revenues for the full year?
So if you really think about it, in this year, we have delivered a profit before tax growth, if I were to look at the full year, of about 37% and 169 crores to be precise. Now that's a very, very, good growth number if you were to look at it. And as you know, that in our business, we have multiple streams of income. Some are in the nature of annuity, whether it is the vacation ownership income, whether it is the annual fee income, and whether it is the interest income. It's the resort income, which is the period income. And as a result of that, despite the income going down by about 13% for the full year, aided by smart cost reduction, we were able to increase our profit before tax by about 37%. If I look ahead, I think what is very, very important for me to think about our company is, what are the headwinds, if any? And when I look ahead, we have one huge advantage. Our occupancies are going to cross 80% plus the moment the restrictions are removed. We have learned to manage our costs extremely well. And I'm not seeing any major inflationary pressures as I look ahead. As far as our member additions are concerned, quarter 4 shows us that people would, increasingly want to look at Club Mahindra membership. So one side, we will grow our cash. Another side, we can
All right, thanks for that and for sharing some of the outlook with us as well. Kavinder Singh of Mahindra Holidays joining us there.